Hey everyone, welcome in to another daily editorial here on the KE Report. Going to be focusing on markets as well as some news out of the Department of Justice going after Apple, as well as breaking down the wide range of sectors that continue to perform quite nicely, including some commodity sectors. I am chatting with Joel Elconin, co-host of the Benzinga PreMarket Prep show, also editor of the PreMarket Prep website. Joel, let's start off by recapping the Fed meeting, statement, press conference this week that reiterated to investors don't fight the Fed. And although the Fed didn't do anything, it didn't change anything in their statement, it was Powell's press conference where he really made it clear that it looks like the Fed's going to be cutting rates this year, even if the job market stays strong. I know we had a lot of commentators coming into this week saying, man, these markets, they've run so far, so fast that they are due for a correction. Well, that didn't come this week. So, Joel, break down the Fed meeting and just how it lit, again, another fire under these markets.
Yeah, good afternoon, Corey. Thanks for having me. And I guess you could put me in a category of one of the pundits that was looking for, what a post expiration turn. And Monday and Tuesday, Monday the market waffled, Tuesday a little bit of a rally, and then boom. I mean, you couldn't have a more accommodative Fed. Pretty much ignoring the data that we got the prior week regarding inflation, and they're just set. I mean, this is the old movie, Wayne's World, party on. I mean, that's just the way there is, and if you're fighting the Fed, at this point, it's a losing battle. So they may have some data that we don't have that maybe can tip the iceberg a little bit. But right now, I mean, what are you going to do if you have earnings still coming in where they are and you have an accommodative Fed? I mean, what else you going to do?
Well, clearly don't try to short these markets because those have been just getting burned time and time again. We can break down all the individual sectors that are doing well as a couple sectors that are lagging, but it really seems like, again, kind of a bull market that isn't just everything running higher, but boy, oh boy, a lot is showing support. What are some of the sectors that were lagging in the past, let's say last year, that you've noticed that really have perked up in this recent rally?
I think it'd be primarily would be the financials. I mean, the financials want lower rates, right? They have so many bad loans on the books that they're never going to recoup where they're at. But the lower interest rates at least takes a little bit of the pain away. Then you're combining it a little bit, with a little bit of the value there. Oil has been responding to the rally. The oil stocks have been responding to the rally in the crude oil market. Housing stocks continue to be strong. KB Homes had some good rates, so a lot of those stocks are still trading at low valuations. And then no one wants lower rates, more accommodative rates than the small caps. A lot of these companies operate on debt. They're leveraged. They need leverage for new operations. The biotech companies need money to continue their trials. So there's no other group, the biotechs, the financials, and some of your oil stocks. I mean, while some of the large caps are still going too. Google had a nice move this week. Nvidia continues to be strong. Amazon holding up near all-time highs. So just money, if it comes out of somewhere in the market, it just goes somewhere else.
Yeah, it seems to. Plus, there does seem to be this trickle of money into the markets simply because broad averages keep ticking higher. Let's talk about this environment where, look, we don't have lower interest rates yet. Right now, we've actually seen the 10-year continue to climb. It's at right around 4.2%, but it's more about the Fed saying 3 more rate cuts this year that do seem to be getting pushed back this year, but maybe we're just going to get them in consecutive meetings at the end of the year. Does this mean that investors need to be focused on those stocks, as you said, that benefit from lower rates? Those could have the best runway in front of them.
I mean, if that's what the Fed is signaling, right? And you gotta be there was anticipation, when the Fed pivot would be. We got it much earlier than expected. I'm surprised that, as anybody by, the Fed pivot and the way things are going and how the economy works. I don't know how many more months of, bad numbers, but the Fed seems to think that, number one, they're slamming the door on raising rates, right? They're holding steady for longer. And yeah, that's what you see, people trying to position themselves that, the solar stocks, once again, the biotechs, they're trying to position themselves ahead of the three cuts. I mean, we're already almost into April, and I just don't, they talk about three cuts. But once again, we were talking about cuts in May, and it keeps getting pushed out. So I would not be surprised at all if the economy's still performing the way it is, still having the kind of response. I don't know. It's just it's a game of cat and mouse, and I don't know. Powell's, I think he's just setting himself up for just one heck of an exit here. Perhaps whether or not there's a change in administrations or not. He's giving investors exactly what they want.
Well, that's the, I guess, balance there. That's the political take on that as well. Let's also talk about commodities. You've mentioned crude. Crude right now, it's down a little bit today, but still over $80. We've also seen copper bounce higher, again, showing a little weakness today, but that's still above $4. Gold reached 2,200 in pre-market trading after the Fed meeting, but has reversed a little bit to 2170 right now. Silver also had a reversal, but overall, these commodities are also higher. Is that simply the interest rate outlook?
I mean, you would think those commodities being higher like that would, be a little bit of a warning signal, but it's not. I mean, the Fed seems to be just, I don't want to say ignoring it, but, you still have a lot of other commodities. You have wheat trading at a multi-year low. You have corn. Corn's been a little bit stronger, but off its February low. So there's a lot of the balancing act with the commodities and the strength in the ones that you had met, the crude and the gold. And well, gold, it doesn't really, that's a supposed to be a gauge of inflation, but it's offset or supposedly offset by, look at your natty gas. You can get your natty gas pretty cheap. So it's all balancing out natty gas at multi-year lows. So there's a lot of ways to interpret, the commodities markets, but right now really nothing seems to matter. The Fed is set on its course, and they don't really seem to want to deviate from it in any way, despite what the data says.
Yeah, well, what about that though? Because it was last week that everyone was talking about, ooh, we're going to maybe have some issues with inflation. Inflation isn't coming down as quickly as the Fed wanted. Jerome doesn't seem to care. The Fed doesn't seem to care. Their outlook for inflation still isn't getting down to their 2% target, but it is creeping lower and lower. We can talk 2 years out of their projections, but we all know how much those move. Why doesn't the Fed, or I guess how quickly the markets forgot about that data, simply because, look, I guess central banks still just control money flows, and that's what matters for markets.
We're still at like a really, I mean, look at it, still like a pretty accommodative stance if you look at things on historical perspective. I don't know if he's going back to, transitory or not, but and I have mentioned this on the show over the years, about, the pandemic and the supply chains and working, and those take years to, work themselves out when you have the world economy, basically come to a halt. There's disruptions in the supply chain. So we've made significant strides on inflation. A little bit of a pause in the action, but perhaps the Fed and Powell are just looking at as, maybe, I mean, the next big Fed pivot would be like, well, maybe we weren't dead serious about 2%. Maybe 2.5% or 3% is more acceptable. So a lot of different factors going into the market here, but price don't lie, and price has been going up. Today we're seeing a little bit of weakness, but once again, on these declines, I mean, yeah, you can be short, you're playing at this, but you always feel like, man, there's a lot of bids out there. There's a lot of people that have missed this market, and these pullbacks have been extremely shallow. That's just from a market feel, market structure standpoint.
Fair enough. One thing that catches my eyes with the little bit of weakness that we're seeing in the markets today is that the VIX is also down. So, not like people are taking a whole lot of the bet on the other side right now. Let's talk a little bit on tech because there is a story that came out yesterday regarding Apple and the Department of Justice antitrust case. A couple of the articles that I read said that, look, possibly Apple could be split up because of the monopoly it's had in the cell phone market. Any significance here to Apple and the bigger tech space?
I tell you, I was for one that looked at the news. Yet, the DOJ, they've been coming out with this stuff and different antitrust regulations and things like that. It seems like they always seem to get shot down. Never really anything happens on it. So I kind of took that stance yesterday. But obviously the street did it, and it took a considerable haircut yesterday, losing over $7, getting a little bit of a bounce back today as far as like splitting up the company. I don't know if the sum of all the parts is greater than the whole, but Apple just seemed to be getting out of its own way, and then boom, it gets hit with that. So we all know how long that process takes to work itself through. But right now, weighing heavily on the stock yesterday, and if it wasn't for Apple just getting creamed yesterday, it could have really been one heck of a day in the market. So it's out of favor, still trades at a high valuation. They gave up on the AI. The interesting thing about, they talked about partnering with Google this week as far as powering the AI on the phone. So that gave Google a nice boost. And then today there was some news on potential collaboration with Baidu as far as AI initiatives. So I mean, Apple, as always, always in house creating things, our own products and stuff. It seems like, the new guard here was not new. Tim Cook's been around for a while, but, they're looking outside the company to try and, create a new buzz of the next new product.
Yeah, we do have to remember just how well tech did, right? And how tech was okay with higher rates because they just had so much cash on their balance sheet. One other sector that has not done great, at least recently, that's the retail sector. Maybe a little bit of weakness in the consumer that a lot of people have been waiting for, but Nike as well as Lululemon struggling a little bit here. Is this a sector you're avoiding right now?
It's just hit and miss. I mean, look what Guess Inc. did yesterday. Walmart trading at all-time highs. Target had a nice report. Buyout for Macy's on the table on ONON. That company got knocked on earnings, bounced right back. So it's really the have and have-nots in the retail sector. You have Decker Outdoors hitting new all-time highs. You have Dick's Sporting Goods with a good report that's hitting all time highs as well. So the retail sector is hard, but there's big winners and there's big losers. Lululemon, both today, Lululemon and Nike, the reports are okay, but it was the weak outlook, the weak guidance that sets the bar low though for their next earnings report.
All right, Joel. Thank you very much for your time, man. That was great. Going around the horn here, talking about a lot of the strength out there, some of the weakness, and what we're seeing, the environment moving forward throughout this year, which is still leaning towards a more accommodative central bank, the Fed. We just don't know when those rate cuts are going to come, but boy, oh boy, Powell really did try to drive it home through a lot of that press conference that rate cuts are coming. Again, question mark on timing. Joel, thank you very much. Everyone, you can check out Joel's PreMarket Prep website by clicking the link below. Have a great weekend, Joel.
Okay, thank you, Corey.